So much, Hormus, for joining us with all those details. By the way, the net equity flow is at a multi-month high. I would say it's an all-time high as well. 42,672 crore rupees in terms of equity inflows, which compares with 23,567 crore rupees. You know, in this fiscal itself, so far, we haven't seen this number. I have data from June itself. June last year was 40,573 crore rupees. Then we had December at 41,136 crore rupees. Apart from that, it has been ranging between 24 to 30,000 crore rupees. So this 42,000 crore number is a big surge that we have seen, multi-month high that has come in for the equity inflows as well. So big surge there on a month-on-month basis, of course. In terms of large cap funds, let's quickly take a look at what the inflows there have been. It is coming at 2,125 crore rupees. It compares with 1,694 crore rupees. So even that number is quite impressive if we look at that number, because around that 2,000 mark, that's the number we saw in March and April. So this also explains this is not led largely by large caps. It will be led by mid caps or small caps. That number should also come up for you on the screen in just a bit. But for now, large cap fund inflows at 2,125 crore rupees. Of course, it's an increase, but it is lower than the numbers that we saw in Jan, Feb, in March. Of course, at that point in time, we saw a different number as well. So here you go. Small cap fund inflows have come in higher at 84 crore rupees. And I think even this is a number which is higher. We have not seen the 6,000 number in a long time. Yes, that's right. The equity inflows this time around led by small caps and mid caps as well. Both of these segments have done really well. Even that 5,000 crore mark for mid caps, we haven't seen in a long time. So higher mid-cap flows, higher small-cap flows. We'll have to see how hybrids are doing as well, because when markets started declining, we saw that major shift coming in to hybrids, people making a choice which has all the forms of investment asset classes. So far, looks like a decent improvement that we have seen. Liquid fund has seen as an inflow as well. That's also happened because we saw savings bank rate go down. So liquid funds are where people were parking their regular money for higher returns.
And this is despite in all the weeks of July, you've actually seen the markets go lower.
Yes, of course.
So when you take that particular data into account, clearly indicating that the kind of selling that we've seen, especially from the FI, especially post a muted Q1, if you could call it, in terms of an earnings season, you've seen inflows across all of the asset classes, across all of the equity mutual funds actually go ahead and significantly rise on what was a quite strong base of the month of June. So equity funds, 42,672 crore is the number that we are seeing. The net equity inflow, like you just mentioned, has almost doubled on a year-on-year basis. ELSS, fund outflow marginal, but the important point is when you're looking at the mid-cap and the small-cap flows, that's gone up quite significantly. And resultantly, despite a muted market performance or equity market performance, what's actually transpired is that the total AUM of the equity market has actually gone up on a year-on-year basis. Again, something that is quite positive.
It is something that tends to happen, right? Whenever we do see flows increasing, and SIP number has been at record highs every month. Last month, it was around the 27,269 crore mark. Let's see which way things go this time around. But as you pointed out, 6 weeks of continuous losses in the markets, but we've still seen inflows coming into large caps, mid caps and small caps as well. We'll just look at the numbers in greater detail and get you more analysis. But for now, it's an improvement for sure. Let's get in Akhil Chaturvedi of Motilal Oswal Financial Services joining in now. Akhil, good afternoon. Thank you so much for joining in. What do you make of the numbers? Despite the decline, we have seen improvement across the board when it comes to different segments. Can you give us your sense of what led to this improvement? Which are some of the categories which continue to do well?
Yeah, so I've just got hold of the numbers. I think the numbers are looking, pretty exciting now. From the previous month, we did about 32,000 crores, so it's 10,000 crores more in equity in terms of net sales. So clearly, I think what we sense is that investors are trying to benefit from the volatility in the market and trying to, invest as the markets are giving opportunity. And that's the sense we broadly get. But the numbers are very exciting, honestly. And it's a very positive change that if markets get volatile or if markets correct, then investors actually take a positive view and try to benefit rather than what used to happen earlier on where redemptions used to go up. So pretty positive numbers.
You know, Akhil, this time around, we did see, in the last month, we did see that inflow falling in the sectoral funds, in the thematic funds, and lower NFOs as well. But this time around, we've seen an improvement. New fund offer inflows have been around at 30,000 crore rupees, sectoral funds at 9,000 crore rupees. Is this just the start of a new wave of inflows into sectoral and NFOs?
I'm not sure. It's early days. Honestly, I have to see the breakup of the numbers category-wise.
Right.
But I think we need to wait and watch. Maybe some themes, such as manufacturing or defense. I think these are some of the or digital, some of the categories where investors have taken interest. But I've yet to see the breakup. Honestly, to make any comment right now.
Absolutely, Akhil. We'll wait by and we'll get more comments from you a little later once the intricate details are out. And we'll also wait and watch for the monthly SIP number, whether that has sustained similar to last month's level or whether there could have been a slight bump up over there as well. But we'll now slip into a short break. The management of D Development Engineers joins us next to discuss the Q1 and FY26 outlook.